Welcome to all. Myself, Dr. Kapil Vyas, faculty at SAYS Institute of Commerce. Today, I am presenting a lecture on internal reconstruction of companies, a chapter of advanced corporate accounting. Meaning of reconstruction. Reconstruction is the process of reorganizing of a company's capital structure. Reconstruction may be internal or external. In internal reconstruction, necessary changes in capital structure of a company are made without affecting the existing of a company. It's a plan in which efforts are made to bring out the company from losses and put it in profitable position. Thus, internal reconstruction, the objective of reorganization is achieved without going into the process of liquidation. On the other hand, in external reconstruction, the existing company is liquidated and its business is taken over by the new company. AS 14 applied for external reconstruction or amalgamation. Desirable conditions for internal reconstruction. In the following conditions, the internal reconstruction of a company becomes desirable when the company's capital structure is very complex and it's required to be made simple, when accumulated losses of a company are very large and they are required to be written off so that the company can declare dividend, when assets shown in the balance sheet does not fully represent the actual value and they are brought to at actual value, when the capital gearing ratio between equity shares and fixed cost bearing capital is not fair, and last, when changes is required in the face value of shares of the company so that they can become attractive for the investor. Provisions regarding internal reconstruction authorized by Article of Association, passing of a special resolution in general meeting, permission of tribunal court is must required, payment of borrowings as per section 66 of the company has to repay all the amounts it gets deposited and also the interest due on before going into the capital reduction process. Consents of creditors are required and public notice issued by the company regarding internal reconstruction. Method or forms of internal reconstruction. Internal reconstruction of a company can be carried out in the following different method. First, internal reconstruction by reduction in share capital. Then internal reconstruction by alteration in share capital, and also scheme of arrangement with members, debenture holders and creditors of the company, or share surrender scheme. First, internal reconstruction scheme by reduction in share capital. In this method, director of a company prepares capital reduction program according to the provision of 66. A proposal is put before the shareholder to sacrifice their capital, and the capital reduction account is opened in the book of company. The amount sacrificed by shareholders, debentures, creditors is credited in this account, and this amount is used to write off accumulated losses, fictitious assets such as goodwill, P&L account, debit balance, trading loss, preliminary expenses, underwriting commission, discount. And after writing off losses, if there is any balance available in capital reduction account, is transferred to capital reserve account. The following entries are made in the program of reduction in share capital. When the face value of preference shares or equity shares are reduced, Then the entry will be rupees old preference oblique equity share capital account DR to rupees new preference oblique equity share capital account, or sacrifice amount transferred to capital reduction account. If there is any credit balance in reserve and surplus, then this amount is transferred to capital reduction account also. If claim of debentures and creditors are reduced, then the reduced amount transferred to capital reduction account. If any increase on revaluation of assets, then increased part transferred to capital reduction account. And in last, to write off loss assets, then the entry will be made capital reduction account DR to trading loss P&L account, to fictitious assets, to particular assets, to provisions for contingencies, and in last, to intangible assets such as goodwill, patent, copyright, trademark, and balance, if available, then transfer to capital reserve account. Second method, internal reconstruction by alteration in share capital. The following methods can be used for alteration in share capital: increase in share capital by issue of new share, consolidation of share. The company may decide to alter the share of smaller value into larger value. It's called consolidation of share. And subdivision of share, conversion of share into stock. It's necessary for all that stock share capital converted into digital stock, and cancellation of unused share capital and uncalled capital. Then the scheme of arrangement with members, debentures, and creditors. It's also called scheme of share surrender. In this scheme, the shareholders, debenture holders, and creditors may plan. The debenture holders and creditors may sacrifice, and this amount used to allotted shares in the program. Thank you.